every bear market has been a little bit more manageable. I'm in the camp that the current one will probably end up being around a 70% drop. I think that if people kind of understood that crypto has always existed in an early business cycle environment, and why there was not really a rotation into altcoins is because we're in a late business cycle. In a late business cycle environment, oil going up can lead to a short-term spike in inflation, right? But usually what it does is it actually then causes markets to collapse.
If I were to ask you, what would need to happen for Bitcoin to essentially double to 150K before June, we were to put a finger on something, what would that be?
I think in order...
Our next guest has correctly called the top in Bitcoin in October 2025, and now he's back with us to give us his updated outlook for 2026. It's not shaping up to be a great year for Bitcoin and crypto, he says, so we're going to find out where the bottom is and how Bitcoin will perform into the summer this year. We're also going to be talking about monetary policy, alternative assets in general, and the dollar and the business cycle. Very important topics. Ben Cowen is back with us. He is a founder of Into the Cryptoverse, and we're going to be going into a deep dive into the Cryptoverse today. Check out Ben's last interview with me, link down below, aired January 1st, beginning of the year. This video is sponsored by Kalshi. It is a fully regulated platform that lets you trade on real-world events, from economic data to political outcomes. Sign up and use my code LIN, L-I-N, link in the description down below, or scan the QR code here. New users will get $10 deposited to your account when you trade $10. Traders can put money down on their favorite teams, events, elections, and more in all 50 states, including California and Texas, in over 140 countries. Ben, welcome back. And again, I encourage people to check out Ben's last call with me, link down below, which he made on my show late December, early January. Welcome back, Ben. Good to see you again.
Yeah, thanks for having me here. Pleasure to come back as always.
You were on the show late December 2025. We aired that interview January 1st. I think it was one of the first videos on my channel this year. So link down below, check out Ben's views. You were correct last year in calling for the Bitcoin bear market of the fall, which was a spot-on call. I believe you're not as bullish now as you are in prior years. You're still kind of saying that Bitcoin is in a bear market or medium-term bear market. Correct me if I'm wrong. And you're expecting the 200-week moving average to return sometime in 2026. Things could look like the April 2025 low, potentially around the low to mid 70,000s, which is exactly where we are now. So my first question is the bottom?
Unfortunately, I don't think so. I think that the Bitcoin will likely go lower as the year goes on. And I want to throw up a few charts to kind of provide why I'm not. I mean, I will say this, like, I don't think it makes sense to be as bearish as before Bitcoin had a 50% drop, right? But with that said, I think just looking at it objectively, midterm years historically are not great for Bitcoin. So to give you an idea of some of the things I'm looking at, I think we could first start off with, say, the year-to-date ROI of Bitcoin, just kind of keeping it simple in 2026, and then looking at the average of prior midterm years. And we can even overlay one standard deviation off of that average. And like you can see that Bitcoin, generally speaking, is following the average return of prior midterm years. So this is kind of that the midterm years for Bitcoin historically have always been like a major window of weakness for whatever reason, whether you want to blame the 4-year cycle, the halving, liquidity, the election cycle. No one really knows for sure. But to me, it still looks like it's tracking the average of prior midterm years. The good news is, as measured from the peak, the drawdown hasn't been as, quite as bad. So if you look at the current drawdown from the peak, and we average out, say, the last 3 peaks with one standard deviation, we're actually not dropping as much. But I think there's a reason, David, that we haven't dropped as much. And it's because, first of all, Bitcoin experiences diminishing losses from one cycle to another, one bear market to another. Every bear market has been a little bit more manageable. So to look at this screen right here, you can see the first bear market for Bitcoin was about a 94% drop. The second one was about 87. The next one was about 84. And then the next one was about 77. So I'm in the camp that the current one will probably end up being around a 70% drop, maybe plus or minus 4 to 5%. So if we get down to those levels, then I probably would, I imagine I would sort of flip my views and no longer be bearish on Bitcoin. But look, I know there's some indicators that people are pointing to that might suggest the low is in. But I feel like for every indicator that we can find that might suggest that, it just seems like there's so many others that would suggest otherwise. And I want to show you a couple more charts. One of them is the ROI of Bitcoin as measured from the low. And I think we probably talked about this chart in the last video that we did, how this past cycle lasted 1,062 days. The cycle before that one lasted 1,059, and the cycle before that one lasted 1,068. And if you just extend this out to the lows, it would still suggest that we have, some more months ahead of slightly lower highs and slightly lower lows for Bitcoin. So to give you just like a couple of examples of charts that I think would make more sense, because this is more of a time-based thing, this chart. In terms of a price-based thing, some of the interesting charts that are some on-chain charts to look at. Historically, the price of Bitcoin bottoms whenever after the Bitcoin percentage of supply and profit and loss, after they have crossed, you start looking for a low. You don't historically want to look for a low until after they have crossed. And then one of the other things we can look at is something known as the balance price and the realized price. So if you look at Bitcoin's prior bear markets in 2011 and in 2014, 2018, even in 2020 and in 2022, Bitcoin went below both the realized price and the balance price. And you can see that so far this cycle, that has not yet happened. So I don't really think this time's going to be different. I have a feeling Bitcoin will face these macro headwinds going into the summer, and perhaps later this year we can turn things around.
I'd like to spend a few minutes and talk about what drives capital flows in and out of Bitcoin. So take a look at my screen here. I'll just show you a Bitcoin chart real quick. So this is BTC, and as you can see, basically since October, Bitcoin has not had anything to do with the NASDAQ, which prior to, I guess, now has been, as you can see by the chart, one of the dominant narratives for why Bitcoin has been moving. It's been trading as a leverage play to tech stocks. Not so much this year. Now, if you overlay this with the DXY, there's still no strong definitive relationship with the DXY, although I have noticed that ever since the Iran war broke out about a month and a half ago, or just actually 3 weeks ago, Bitcoin has been trading more in line with the DXY, and to a certain extent earlier in 2024 as well, whereas prior to 2024, that narrative never really took shape. So I'm wondering why in the last 2 years there's been more periods than not. Of course, I'm not going to say it's perfectly correlated with the dollar because it's not, but I'm just saying that there have been more frequently or more frequent periods in which Bitcoin and the dollar have moved together than in prior years. Was this a result of the Bitcoin treasury companies being a new trend or something else here?
I mean, there's always the narrative that we can find. But I mean, the reality is the dollar is doing the same thing it did in 2017 and 2018. If you look at what the dollar did, I mean, I don't have the chart in front of me, but if you look at the dollar, well, I can pull it up. If you look at what the dollar did in 2017, the dollar topped in I think January, and let me just show you on my screen really quick here, sure. So that everyone can see what I'm talking about. So if you look at the dollar in 2017, and again I'm pointing this out because we have basically the same administration in place in the United States. Dollar DXY topped January 2017. The DXY found a top January 2025, and then the dollar was weak. And you can see it remained weak for a while, just like it did this cycle. And what happened was the dollar ended up bottoming in February of 2018, not that dissimilar from what we just saw happen with the dollar in this midterm year. And so what I think is going to happen is I think the dollar is going to probably start trending back up here, maybe to around like 105, 106, somewhere in that ballpark, maybe a little higher, maybe like 107 or something. But there's periods where markets are correlated and periods where they're not. And like, just because Bitcoin usually goes up when the dollar goes down, or just because, vice versa is always true, or typically doesn't mean it's always true, right? You can have periods where one's going down and the other one's going down, or one's going up and the other one's going up. So I don't really put a lot of faith into the idea that it matters a whole lot. I think the bigger thing that's happening right now with Bitcoin as it relates to other risk assets is you'll see Bitcoin as bleeding against other risk assets. So like, for instance, if you were to look at Bitcoin's valuation against the NASDAQ, for example, right? That's been bleeding since July. So at this point, Bitcoin has now dropped about 55% against the NASDAQ since July. Bitcoin has been dropping against gold as well, right? You can see it's been dropping against gold. It's now down about 60%, but it was down about 70%. I don't think that these short-term bounces by Bitcoin on its gold valuation or Bitcoin on its, say, its NASDAQ valuation, I don't think they represent a new trend, right? If you look at, just to give you an example, I mean, if you look at Bitcoin's gold valuation, it always rallies in March of the midterm year, right? Here's March of 2022, and here's March of 2018. We typically see rallies by Bitcoin against gold in March of midterm years. So I don't really think, it's easy to want to look at these correlations in the short term and try to figure out what's happening. But I think that right now we're sort of in that phase where everyone thinks that, or a lot of people think that the bear market might be over because of this rally, but we've seen these rallies before in midterm years, and they didn't actually mean that the bear market was over. It still had plenty to go after that. So I do think it's relevant to think about that. And one of the reasons, David, why this cycle has felt so different and why there was not really a rotation into altcoins is because we're in a late business cycle environment. And I think that if people kind of understood that crypto has always existed in an early business cycle environment, and that's what led to the prior alt seasons, as they call it, if people understood more of like this time, the reason it feels different is because this time it's a late business cycle environment. And in a late business cycle environment, risk rolls down the curve rather than up it, right? So early cycle, you go from like the lower risk things, and then people take on more and more risk until they get all the way out on the risk curve, and then you get a blow up top. But in a late business cycle environment, the speculative excess, that dies off first. And that's why altcoins have been bleeding to Bitcoin, Bitcoin's been bleeding to stocks, and then stocks have been bleeding to gold.
Is there a direct relationship between spot Bitcoin ETF flows and prices? It looks like flows have improved in recent weeks, but the price is still hovering sideways or trading sideways.
I mean, I can't, if you look at I think we track some of the stuff on the website, but I don't see any, like if we were to separate this out and just look at say ETF holdings, ETF holdings right now for Bitcoin aren't that different than where they were back in October, but yet the price is 50% lower. So you have you potentially have a scenario here where there's a lot of people that came in and bought the ETFs, but the OGs that have been in Bitcoin for 10 years are selling to them essentially. There's not a lot of new retail participation that is actively following this up. Yes, there are some people buying ETFs, but the problem right now is that when you look at like social interest, it's just been trending down since 2021. This chart here shows the social interest of Bitcoin. It topped in May of 2021, and it's been trending down ever since. So while yes, there's people that are buying the ETFs, there's not really a lot of new people coming into the space like we've seen in prior market cycles. Well,
what if inflation fears continue to rise? So let's suppose oil stays high and we have a situation where the CPI headline and core start to rise. What impact does that have on risk assets, including Bitcoin?
Yeah, I mean, it's not good, basically. And basically, 2026 is just a weak year for crypto. I think going into next year, 2027, it'll probably look a little bit better. But I think this year, it's just easy to recognize there's macro headwinds. A lot of the rate cuts that were getting priced in previously have now been pushed off to like the end of 2027. And if you look, this is a business cycle chart that I developed, and this is anyone can recreate it. It's just the S&P 500 divided by the unemployment rate squared, multiplied by U.S. interest rates, multiplied by the U.S. inflation rate year over year, and then normalized by M2. And when you look at this chart, like you can pretty clearly see the business cycles, right? Like you can see the business cycles in the late 60s and the 70s, and here the one is in the 90s, and then here's the .com, and here's the financial crisis. And the only other time in history where we got a glimpse, the only other time in history where crypto got a glimpse of a late business cycle environment was in fact in 2019. But what happened back then, we saw Bitcoin top out in June, 2 months before quantitative tightening ended. Just like this cycle, it topped in October, 2 months before quantitative tightening ended in December. So the same thing's playing out. It's just that we got a glimpse of what would happen back in 2019. And higher risk assets did not start outperforming again until after the business cycle was over. The problem is that historically, for the business cycle to be over, you need some type of crisis that then allows for looser monetary policy and looser liquidity conditions, right? If we have this like liquidity risk metric that shows you that this has been a very tight liquidity regime for a while, and in order for those low risk assets to start underperforming high risk, you need something that brings this liquidity metric all the way back down to the lows. Because until that time happens, you're still likely going to see alts bleed to Bitcoin, Bitcoin bleed to stocks, and then stocks bleed to gold. And we actually just had a pretty major event happen since the last time that you and I spoke about this. I think I don't know if I showed this chart the last time we spoke, but it's a chart that I think everyone should be looking at, and it's the stock market's valuation against gold. And what you'll see is that it basically is breaking down from the same valuations that it broke down at in 1973 and in 2008. And historically, this is not a good thing for risk assets, right? I mean, like recently it's bounced back up to back test where it broke down from. But historically, what happens after the stock market breaks down against gold is that the stock market then gets, its own sizable correction, which is, I believe, kind of what we're in right now, right? You can see in 1973 when it broke down, we saw stocks get a correction, and of course, we know what happened in '08. It's a long process, right? It doesn't play out overnight, but you can see that in order for things to change, something needs to happen. And one of those things that could be happening right now, which you mentioned, is something like the price of oil. Because in all of the prior business cycles, so if you look at this chart, these business cycles, if you were to overlay the price of crude oil on the chart, what you'll notice is that it's in a late business cycle environment when the price of oil spikes that then leads to the beginning of the end of the business cycle, right? And the reason is because the Fed has a dual mandate. They maximum employment and price stability. When the unemployment rate is going up, they lower rates. When inflation is going up, they raise rates. What do they do if both are going up together? And as I've said before, I've made this chess analogy many times. If you want to checkmate your opponent, you have to create two weaknesses. If you create one weakness, they can defend that. So the Fed can always defend against one weakness. It's having to deal with two weaknesses at the same time that ultimately leads to checkmate. That leads to the crisis, and that leads to the resetting of the business cycle, where the higher risk assets, drop a lot, and then we kind of go into a fresh new market cycle where all the froth from the prior cycle basically just went to zero, and then we start anew, and the economy, while the contractions are difficult, it actually helps reset the economy and keep it healthier for the long term.
Just on that note, would it be fair to say that if we have both weaknesses, weakening labor market as well as higher inflation, the Fed should defend against inflation because higher inflation will cause a recession anyway? And so in that situation, they would have to just keep rates high?
The issue right now is how weak the labor market is. So like if you look at this chart, this is total non-farm payroll. I think the labor market's a lot weaker than people think it is. If you look at the year over year change in this establishment survey, it's very close to going negative. So like the excess from 2022, 2023, and 2024 is completely gone. But because of that, because there was all this excess, I feel like it gives people this like false sense of security that there will always be this excess, But you can see that contractions have historically occurred when this metric goes negative, and it's very close to going negative. Now, if you look at layoffs, they're relatively low, right? You can look at layoffs and discharges in the United States, they're relatively low. You can look at initial claims in the United States and see that they're trending still around 200,000. And I've said before, until they're at 300,000, you can't really call for a recession. But it's the issue is that the stock market going down leads to layoffs. It's not initially anyways. It's not layoffs starting that then leads to the stock market going down. The stock market kind of sets it in motion. And on average, by the time recessions are here, once the NBER announces their recession, on average, the market has already bottomed 15 days earlier, at least looking at the average of the last like 7 or 8 business cycles. So the weakness, though, David, is in is in everything else. It's not the hiring, it's not the layoffs, it's the hires, right? If you look at hires, that's been trending down for a long time. You could look at job openings, that's been trending down for a long time. The weakness is already there, but the reason why we haven't kind of entered that last phase of the business cycle is because the unemployment rate has only been steadily going up. It hasn't entered into that nonlinear phase, right, where it goes up and there's no way to control it. This steady rise in the unemployment rate, that's what they wanted, right? That's what the Fed wanted. They wanted to reduce pressures on wage inflation. They wanted to loosen up the labor market a little bit. But now it's loose. And now, theoretically, if their mandate was only the labor market, they absolutely would be cutting right now, because we just had, we're about to go negative in year-over-year job growth. The problem is what you said, and that's that they have this dual mandate. And look, if inflation starts coming back, that's going to make them not cut as aggressively as they should. And so what I think could happen in a late business cycle environment, oil going up can lead to a short-term spike in inflation, right? But usually what it does is it actually then causes markets to collapse, right? And markets to drop, which then is a more disinflationary impact. If we are to have a secondary wave of inflation like we had in 2022, it's not because the price of oil goes up. It's because they turn the money printers back on in response to trying to save asset prices, right? So oil could be the reason that then eventually leads to inflation because of the response by people to sort of solve if we have this crisis. But oil going up in and of itself in a late business cycle environment, historically, while short-term inflationary, eventually starts to lead to more disinflationary times.
Okay. I just want to point something else out. This is an article published in February, but it says Bitcoin nears pre-election floor as ETF flow stalls. Citi says this is from CoinDesk. Crypto markets are approaching important inflection points weeks after declines. Crypto markets have exhibited the volatility similar to precious metals, but without the upside. So regulation remains a key potential catalyst. We haven't talked about regulation yet, which is why I brought this up. The fact that the administration has been supportive of Bitcoin, and then Bitcoin is currently at around the same time as the pre-election price in late 2024. Does that signal a potential floor? From that perspective, Ben, just comment on what we're seeing here.
No, I don't think any of that stuff matters, honestly. No. I mean, long term, is it bullish for the asset class? Absolutely. But the reality is Bitcoin has mostly just gone down, despite all this stuff. And if you think about it, basically this more pro-crypto stance was more so just a way for a lot of influencers to launch meme coins without fear of repercussions. And so I feel like it just further led to the malinvestment of capital in the crypto markets and made people focus on things they shouldn't be focusing on. And because of that, Bitcoin is punishing the market and making sure that people get back in line. And that's what usually does in midterm years. And usually by the end of midterm years, people are back in line, and then we start another bull market. But I don't think any of that regulatory stuff really matters for the short-term price action.
What is the next meme coin phase, so to speak? In other words, the next altcoin cycle, if that were to appear anytime soon, what would that be, I guess, centered on? Would it still be meme coins, or do you see another trend emerging? Would it be AI coins?
I think to truly have another alt season, and I've been anti-alt season for like the last 4 or 5 years. I mean, I've been on your channel a lot during that time period. I've always said the same thing. I think in order to really have a phase like that again, it needs to be after the current business cycle is over. So basically, a lot of the froth should die out this year, and then liquidity conditions hopefully can be a lot looser in a future market cycle. But the problem for altcoins this past market cycle is we were in restrictive territory the entire time. The Fed funds rate was essentially above the 2-year yield for the entire cycle. And I'm using the 2-year yield as an approximation of the neutral rate. We were also in quantitative tightening until the very end of the bull market. And so we didn't have the right macro conditions for higher risk assets to really do well. Next cycle, could that change? Yeah, it could. In order for that to really change, though, I think we need to see the markets kind of unwind further this year. And if they can unwind further this year, then perhaps the next cycle will go back to what people remember. But again, there's still a long way between now and then. And if you look at what's happening with energy prices recently, now we're not even projected to have rate cuts until I think, mid to late 2027. So it's hard to know. I mean, you have these 4-year cycles existing within larger business cycles. And right now we're just in the post apathetic top decline, sort of this digestion phase in the crypto markets, where it's digesting the bull market that it had for the last 3 years. And, the people that were waiting for an alt season, it never happened. And so what it shows, David, is that in crypto, the only asset that I think is worth holding long term is Bitcoin, because all the other stuff just bleeds to Bitcoin. And the only other time where the other stuff durably outperforms Bitcoin is after a euphoric rally by Bitcoin, where retail interest starts to come back. But if you're looking at a chart and you're watching social interest trend down every single year for 4 years, it doesn't make sense to call for alt season, because there's just no one around to buy these coins. Like, no one cares anymore. And so that's kind of what I wanted to communicate to people is, look, this is more of a late business cycle environment. And this is why it didn't play out like a lot of people were hoping it would.
Yeah, and by the way, this is just from Cowshares prediction market. When will Bitcoin hit 150K? Traders are not optimistic it's going to happen this year. There's basically no chance. So the sentiment right now, this is just to highlight sentiment, is not euphoric at all. It's quite the opposite of that, which, by the way, may be a contraindicator in itself. I don't know. I'm just playing devil's advocate right now. I've just noticed in the past when no one thinks Bitcoin's going up, that's usually the bottom. But you've got better indicators to actually track sentiment. What do you use to gauge sentiment, by the way?
Yeah, I think it's all about like these mental gymnastics, right? Like, I remember back in Q4, and I think we saw each other in Las Vegas, if I'm not mistaken, before Q4. And we kind of talked about how Bitcoin would likely top, when it always does, right, in the fourth quarter of the post-halving year. And when the fourth quarter came, there were a ton of people that were calling for the 5-year cycle and the super cycle and all these things. And they use different arguments, right? They use things like the money supply, lagging M2. They use liquidity conditions. They use the fact that we hadn't had an alt season yet, which is why the market cycle would go on. They used all sorts of things. And one of the main things they used was, because everyone's predicting the 4-year cycle top, it won't happen. But then it happened anyways, And I think there's this reality of like, people that are bullish like to assume that everyone is bearish. Like, just because the markets say that Bitcoin is unlikely to hit 150K doesn't mean that there's not a lot of people out there that are bullish. Believe me, David, everyone would know, because I post bearish videos every single day and I get called out by like 20 different influencers anytime I do it. So it's not true that everyone is bearish. I mean, there's probably a lot of people that are bullish, but they don't think it's going to go to 150K this year, right? They might say, all right, well, maybe it'll do it by 2027 or 2028. But there's a lot of people that I see online that actually think 60K is the floor. I'm not saying it's impossible for it to be the floor. What I'm saying is that in midterm years, we're going to test that over and over and over again. And because we're only in March, I think that there's still plenty of time for the rest of this year where we're going to keep testing that 60K level. And eventually, I think it very well, could break and we could go down into the 40 to 50K range. And then in January, right? In January, the last time I came on your channel, we were in a counter trend rally, right? We were in a counter trend rally. Bitcoin had already traded up from the low of 81, and I think it was approaching 90. It went all the way up to 90, 97, 98K. And back then, the narrative that I saw posted in response to my videos and the views I was expressing, the response was, well, if everyone's expecting the midterm year to be bad, it won't be, right? And then what happened is Bitcoin topped when it always topped. And the reality is Bitcoin found a low in February. And in every midterm year, Bitcoin has always found a low in February, and then it rallied into March. It then formed a lower high, and then it went down into the summer. And it's happened every single cycle. So, I think it's easy to pretend like it's easy for the bears to pretend like everyone's bullish, or for the bulls to pretend everyone's bearish. I think it's actually kind of mixed right now. I've seen some polls out there where people will kind of poll people, and it's not as lopsided as a lot of people are sort of making it out to be. I think there's a lot of people that are convinced it's a bear market, but I also think there's a lot of people holding out that because alt season didn't happen, we're still going to get that final rotation. And I just don't think it's going to happen this year.
Well, just on mental gymnastics, if I were to ask you, what would need to happen for Bitcoin to essentially double to 150K before June, which is in 2.5 months, we were to put a finger on something, what would that be?
I mean, I don't think it's going to.
No, we're not saying it's going to, but like, what would need to change? Would the Iran war need to just end tomorrow? Everything revert back to normal, and then I guess capital flows back into risk assets. Would the Fed have to ease tremendously? I'm just making things up here.
I mean, okay, if the Fed were to print $6 trillion like they did in 2020, 2021, then perhaps that would create that environment. The problem is that the Fed, they're not going to do that. The only way they're going to start printing is if there's a crisis. But if you have a crisis, that means the price of Bitcoin goes down, not up in the short term. So it's almost like the chicken and the egg, right? Like people want the money printing, but in order to have it, you need to have a crisis. And in order to have a crisis, risk assets really need to start going down. So I'm not saying Bitcoin can't trend higher at all. In fact, one of the things you often see in bear markets, and this is what is the most difficult part of bear markets. Let me share my screen again. Mm-hmm. Look at this, David. So in bear markets, Bitcoin often spends more time trending up than down. Okay. So like look at November to January. It was generally trending up, just like it's been generally trending up for a month and a half now. It's just that when it trends up, it'll sort of bring people into this false sense of security to make them think it's only going to start trending up or continue to trend up. And then it just breaks down very quickly without giving people really a lot of time to react, you know? And so look at the difference in the structure between the bull market and the bear market. All right. So in the bull market, Bitcoin would generally trend down. You see that? It would generally trend down, and then it would just break up very quickly in a very short period of time. But then when we had the market cycle top in October, everything changed. Then Bitcoin trends up and then breaks down, trends up and then breaks down. So it's the opposite of what we saw in the bull market, where in the bull market, it would trend down and then break higher. So there's been this change in market structure. And I'm not saying the market structure won't break. It will eventually. I just think that Q1 of the midterm year is far too early to call for that to break.
Fair enough. Where did retail go, by the way? You mentioned several times retail left crypto. What happened? Where did they go?
I mean, speculative excess just left because prices went down. You could argue they went to AI. Mm-hmm. I mean, there's a good chance that a lot of the people that left didn't really go to anything else. They just went back to their normal lives, you know? Yeah. Like maybe they just got tired of chasing, these dreams that were promised to them. They were tired of taking their paycheck and putting it on meme coins and getting rugged. And they eventually just said, you know what? Enough's enough. I don't want to live this way. I want to provide, for my family in a more predictable manner and not rely on like these cash grabs by a lot of scam coins. And so maybe they just left. I mean, some I'm sure went to AI, some I'm sure went to other markets. Yeah. But there's a lot of people that I know that were interested in crypto in 2021, and now they don't care a thing about it at all. And it's not like they're going and trading, other markets. They just went other places. So AI could be an example. Prediction markets could be an example. There's all sorts of places that people might have gone, but I think one of the biggest truths is that people just got tired of chasing a dream that was somewhat unrealistic in the short term. But really, the dream still exists if they're willing to kind of stick around and invest in good assets, right? Like that's the way you truly build wealth, not chasing short-term cash grabs.
Fair enough. Before we go, can you just go back to your platform? Excellent platform, by the way. I was just watching you use it, and I was just really impressed. Show us maybe a few on-chain indicators that people can use to gauge, either direction or just positioning right now. You've already shown us a lot of indicators and other macro variables that you follow, but just give us something else here.
Yeah, I mean, there's a few different things you can look at. This is one of the more interesting ones because it's an on-chain risk metric that we created, and it's based on the Peel multiple, the MVRV score, the MVRV Z-score, transaction fees, the terminal price, the miner cap to thermocap ratio, and the market cap to thermocap ratio. And you can see that the markets in midterm years typically bottom when the on-chain risk goes below zero point 0.1. And right now it's around 0.261. So over the long period of time, buying Bitcoin at a risk of 0.26 is likely going to work out for you. But that's not the question, right? The question is like, for this year, how can we navigate this? I think this could be a metric to sort of use to get a better idea of where this thing might ultimately bottom out. I think I showed some of the indicators earlier. Did I show the like the balance price and the realized price? I think I already showed that. But I'll just bring it back up in case people want to take a look at it again. Normally, Bitcoin bottoms below the realized price and below the balance price. Hasn't taken either of those out yet. You could even go look at things like the MVRV Z-score and see that in midterm years, it typically bottoms after it goes below zero, and it still is above zero right now. So there's a lot of indicators you can use. And one that's not really an on-chain thing, but it's more of a social thing, is the social interest, right? And when you look at Bitcoin color-coded by social interest, you can see that this more so resembles that 2019 top, where you have more of like an apathetic top where people just kind of give up and there's no rotation. So in order for the higher risk assets to start doing well, you want to see social interest trending up, because in the alt seasons of 2017 and 2021, it was basically after a full year of social interest generally trending higher. But yeah, that's what I would essentially use for the on-chain stuff. I'm mostly using a metric like this, which kind of combines six or seven of them together.
Okay, well, that's the Into the Cryptoverse platform. I'll put the link down below. Check it out. Where else can we follow you, Ben?
Yeah, I'm on YouTube, Benjamin Cowen, Twitter, Into Cryptoverse. Those are the main places. And then I also do have my new website, benjamincowen.com.
Well, Ben's also a YouTuber. I'm always interested to get other YouTubers' perspective on what's trending and what they're interested in covering now. What have you been focusing on your channel recently?
Yeah, I mean, mostly it's it's the business cycle. It's making sense of the markets and like why risk is rotating down the curve rather than up it. But the thing is there's always a bull market somewhere. And this year it started off in metals and now it's been in energy. And if you look at the last few business cycles, energy actually topped like 6 to 12 months after the stock market topped. And so you could make the claim that, hey, perhaps something like that can happen again. It's not that you can't make money in midterm years. It's just that Bitcoin normally bleeds in midterm years. And if you look at Bitcoin against, say, something like energy, what you'll notice when you look at yearly candles is that every midterm year, without fail, every midterm year, Bitcoin bleeds to energy, right? So 2014, Bitcoin dropped 50% against energy. 2018, 66%, 2022, 77%. So far, it's already down 40%. But this is what Bitcoin always does. It's not about what I want to happen. It would be better for my channel, if people started coming back to crypto, right? Because then that would get, it would raise viewership. People would be in a better mood. But that's just not the phase of the cycle we're in. We're in the phase of the sort of the digestion after the bull market, where Bitcoin bleeds to everything else in other markets. And so we're just kind of waiting, I think, for the midterm year to go on.
Despite that, your channel's still growing. You're almost at 1 million subscribers now. Congratulations. So everyone, click on Ben Cowen's channel right now and subscribe if you haven't already. Let's get him up to as close to 1 million as possible after this interview.
Hey, David, I've told people before that the bear market ends when I get to 1 million. So that's the indicator I'm really watching.
And then from there, it's up to 5 million in a year. All right, Ben. Good to see you as always. Thanks so much. We'll put the links below, so follow Ben there. See you next time, Ben.
Thanks for having me.
And thank you for watching. Don't forget to like and subscribe. And don't forget to use my code LIN when you sign up to Kalshi. That's LIN, L-I-N. Link down below or scan the QR code. New users and traders will get $10 deposited to your account when you trade $10. Link down below or scan the QR code here.